Thank you to Deepak ji. I mean, it was to giving him an opportunity. It was more of an impromptu speech. I tried to be a bit more simple as possible. It was a bit rude, so please do apologize. So, a bit about myself. My name is Venkat. Happily married, having two kids. The elder one is working. The younger one is in uni, studying his mathematics. And the wife is working. She's high flying, a bit of a finance professional, which makes my life. I become more of a house husband actually. Yeah. Um, I landed in Australia in 2006. Landed in Melbourne, and just to have a better connectivity, I moved to Sydney. Melbourne's loss is Sydney's gain, perhaps. Yeah. I'm a mechanical engineer. I've been working in the engineering project management industry for probably around 27, 28 years before pivoting to a mortgage broking career, which I've come to it. Outside the work, I spend a lot of time with family, and I'm also teach Vedas, the fundamental of Sanatan Dharma actually. Anybody who is having some time, please do learn Veda. So it's something, it's more addictive, I can say. It's very addictive. Once you started getting a hang of it, it is what it is. That's a short about myself. How the journey began. This is from sun to moon, from an engineering project management to mortgage broking. It's entirely a different scenario. I was a project manager doing with all day to day. I mean, most of you are aware. I mean, dealing with various internal stakeholders like engineering, quality control, manufacturing, and all those things. Then finance broking is entirely a different ballgame altogether. How all this has happened? When I was purchasing my second investment property, I had a loan consultant. So I did my own research on my first property, which I was running around to various banks, and it find a bit more taxing. So I had a loan consultant. So they done a good job. I mean, in more doing this thing, they get the better option. They saved me a lot of time, and everything has happened. And I was thinking that this is as simple as just the cost of the property, registration cost, and some bank cost. That's all. And that's what I was informed. I'm not going to blame them, but that's how it has happened actually. And suddenly the loan document came, and then I saw there is a shock of the thing. There are some few tens of thousands of dollars on the lender's mortgage insurance, which I was not even aware of it. And then I asked them why this is happening. Oh, you have to do it. You don't have equity, you don't have sufficient savings, so you have to put an lender's mortgage insurance. And that particular concept was not explained to me at all. So, and I later realized that I do have a owner occupied property. Probably might have taken a bit more equity on the property. I could have nullified that loan. And this make me think, hardly think, what is happening? I mean, why I lost this much? To be precise, around $24,000 I lost. I mean, I could have avoided. I'll not say lost. I could have avoided it actually. This experience made me doing a bit more research on how the banking system works, and it started like that. And I started purchasing my property. What has happened is I started shopping around relentlessly with various banks, and it was fascinating to understand how the credit policy of banks works. Different banks have different credit policy. If one is not working, it is working on the other with the other banks, with the other lenders. If the big four is not working, you have a third lender who is more tailored actually to what you wanted to do it. So I got hooked up to it, and as a result of it, I shared my knowledge to my friends and relatives and other colleagues. And people started coming to me for some sort of an advice. And that has taught me, why can't we change the career? This crazy idea has come to me, but I was not confident enough to move it, to take that step, because there needs to be some sort of financial stability, which is what Ashish was explaining in his earlier thing. You need to have some stability to move, to take that step. And it happened. And it happened once I have becoming financially a bit more secure. I stepped into the mortgage broking space. On a hindsight, I probably should have done it 7, 8 years ago. Not now.
I'm sorry, so you recently started?
Yeah, I recently started. It's not. I started in end of 24, early 25. So it's just pretty new in the mortgage broker space.
Never too late.
Yeah, so never too late, probably. Yeah. The thing is, I probably works a bit differently. I will try to earn the trust of client. I put client interest first before my interest. I mean, money earning is one thing, but I cross that stage. My requirement was more limited. My requirement is earning. I mean, my desire is trust with the client. You have a mutual relationship. You develop a trust with the client. A few example has happened. I just wanted to share one example. This is one of the client who has come for a SMSF loan refinancing. He was with a particular lender who was charging n amount of money. Actually, I mean, the interest rate was ridiculous. It's close to 8% for SMSF loan, who is having a very good loan to value ratio. So I tried with various lenders, and then I found out that a refinancing cost is essentially nullifying. I mean, he's not going to save much with the refinancing. What I did it, I armed him with what he needs. Actually, I armed him with the data. His LVR, because since he has purchased, the property value has grown up. The property value has grown up. His LVR has reduced, and different lenders have different tiers on the LVRs actually. So I asked him, I am with the data, and I made him negotiate with the bank directly, and then negotiate with the lender, not the bank, lender directly, and he is able to reduce the interest rate. He was very happy. He has not even spent a cent. In the process, I spent a lot of time in doing this, but I don't charge a cent. I don't charge, because what I earned in this process is the trust. And definitely for his future needs, I'm sure that he will come to me. So this is why I prefer to do the business. People don't care how much you know until they know how much you care. This is a very truthful statement for a business. It's just the relationship and trust matters a lot. I'd like to share a bit three scenarios. They are not big scenarios from a value wise, but they are very good wins, which I like to think. There's a self-employed client. If you have 3 minutes, 3 minutes, I'll just. Sorry. Yeah, that's fine. Yeah, there is a self-employed client who has come to me, and then he's having multiple businesses. He's having a substantial amount of loan debt, taxation debt, which no lenders has touched. And we are talking about not a few thousands, we are talking about few hundred thousands. Big four banks, second tier lenders has not touched it. So I'm able to find a solution to him, because he was a bit reluctant to take a cash out from his property. I'm able to get the loan to him, negotiated with the lender, had a backup plan for him also, because I showed him this is how you have to arm the client with the data, so that they are taking an informal decision. Education to client is very important. The sense, so I showed him the cost of interest while paying off the ATO debt versus the cost of interest with a slightly higher mortgage. And there is a backup plan also. Once after 1 or 2 years, he can always refinance to a competitive interest rates. So the client we get off with the loan within a month, everything was settled, and he is very happy. This is how you have to arm the client with some sort of data. I'll just skip the second one. There is one credit impaired couple who was pretty much having a bad credit score. We are talking about around 350. I mean, they told that they are unable to get a loan and all those things. They tried with multiple brokers, multiple lenders directly. Again, with a bit of an education, they wanted to go with the first home guarantee scheme, which they couldn't go because the lenders policy don't allow. So arm with this thing, get a third tier lender or second tier lender outside the scheme, and then educate them with the data. So what is the net interest loss? How much you are going to save by not going now versus how much you are going to save by into the scheme and going after a few years of time. So they are able to get the loan. There is a backup plan with what they wanted to do in the future. It's a clean blueprint. They have settled the home. They are very happy. Mm. Just wanted to quickly touch upon three mortgage myths, and which many people in this room are aware of it. Myth number one is, many people ask me, what is the cheapest interest rate you can offer? And that is a very wrong question to ask with actually. Which strategy? The right question is which strategy is good for me. So it's end of the day, it's a long-term strategy. Second one is you should always pay off. I wanted to pay off my mortgage as quickly as possible. Not necessary. You may want that cash for investment property, for getting that loan, for a house maintenance, for various purposes. The third one, if bank say no, I can't get a mortgage. No, a mortgage broker can help you with this. Just with this, I just conclude. Thank you.
Venkat, I'm hoping that you are not charging people, right?
Venkat, one you there, one answer.
So, yeah.
That you mentioned your second scenario that you have that client out with a lot of debts and all that.
Yeah.
Did you end up getting that client loan from one of the reputed banks or the tier one, tier
From
two?
ANZ, I moved from ANZ to Pepper.
Okay.
ANZ to Pepper. ANZ not even attempted to, to negotiate or something with the client because they know that it's a big loan amount. They can't. That policy doesn't allow.
Big Four is hard to work with. They are not very flexible in most of them.
Big Four. They're just if it is a ATO tax debt, Big Four will not touch.
That's the point. I think is a good broker will know the rules and guidelines of multiple lenders than just few banks. That's where the value is.
Yeah.
Thank you.